This is the cash flow assignment, which starts on page 83 of your text. You can open your text to follow along, and you should also have downloaded the cash flow template onto your computer. And when you open it, you should notice that I added some notes on this worksheet, how it works. And when you scroll down, I also added the balance sheet for the company for the 2013 one, the new year. And I also explain what are operating activities and some examples that you would categorize them on the statement when you get to do that, and the investing activities and financing activities. If you're not familiar with using a worksheet to prepare a statement of cash flow, basically it's an explanation of previous ending balance sheet accounts, and we figure out whether there's a debit and a credit change to the balance, and then we come to the ending balance right here in this column for the new year, and we make sure that everything is reconciled here. And then down here below, we categorize all these increase. This is the asset side, so if it's a debit, it will be increase for these, and then if they're credits, then it will be decrease for assets. And then down here we have our payables and contra accounts. If they're debits, then that means they're going to be decrease for these credit accounts and contra accounts. And if they're credits, that means these accounts have increased. So the corresponding amounts will go down here, and then we have to categorize these accordingly to see whether they're operating, investing, financing, or non-cash. Non-cash doesn't really go into the statement of cash flow directly. They're simply as a separate schedule at the end of the statement of cash flow, or they can be added as a note to the financial statement. And so to make life easier for you guys, I've actually added all these categories that you need to come up with. So these are set. So all you need to do is to figure out the amounts and the correct formulas for this worksheet. So let's get started. The first thing that the text tells us to do is to input these formulas. So for formula 1, you would go equals B17, because you want to start with the beginning balance of the new year, which is the ending balance of 2012. And then since this is the asset side of the balance sheet, we add to debit, so plus D17 and minus all credits, right, to our asset, because it lowers our asset accounts, F17. And then press return or enter. And then we can actually copy down these formulas. They should work. And then formula 4, it's going to be the reverse of what we did to the assets, because a debit would actually lower your contra account and all the liabilities account, right? So we go equals B24 minus our debits, which is D24 plus F24. And then we can copy it down. Okay, and then we come up here to check to see if we have the correct amounts for cash. So we don't, so we have to figure out what happened, right? Because I have the 2013 balance here, which is 67,210. And then so we can cell reference this. So cash increased, so there's going to be a debit here. So we input equals L17 minus B17, and then we would be able to reconcile to the 2013 account. And then a quick check down here, this one is missing a credit because we still have the beginning balance of merchandise inventory, but at the end of 2013, we actually have less inventory. So we have to input a credit here. So we go equals the beginning balance minus this, which is L19. And then we come to the correct balance for inventory. So to review, for the cash, which is the first account, we started off the new year. This is a little confusing because the account balance really should say the beginning of 2013. But just know that December 31st, 2012 is really the same as January 1st, 2013. So we're reconciling the beginning year balance to the end of the year. So there's going to be an increase in cash, a debit of $27,610 for cash. And then what I did was the merchandise inventory. So for the new year, we had this amount, and then we actually decreased to 200,100. So we're crediting inventory because this is the asset side of the balance sheet. And then for accounts receivable, if we want to do that, we check the beginning year balance, which is 112 and 215, and it actually increased to 121,000. So it's going to be a debit. So we going to input equals L18 minus B18 to make sure that these are all like positive numbers, not negative. So we always do the bigger number minus the smaller number if it's a debit to all the assets. If it's a credit, then we go from the bigger number, which was from last year. Like for example, there's a decrease in inventory, so we go from the bigger number. So this cell would say equals B19, since this is a higher debit balance, minus our ending inventory, which actually decreased in this case. So you can work through the rest of it, and then you should end up with a worksheet that looks like this at the end. Notice that these A, B, C, D, these are just notations for all the balance sheet accounts. They have nothing to do with the additional data which is in your text, which I believe it's on page 83 and 84. They also have from A to G. Those notations have nothing to do with these. So feel free to do, you can also do 1, 2, 3, 4. I don't really mind, but just make sure that you have all these numbers listed here. And then we're ready to come down here and categorize. So you can watch the next video to see how we reconcile these figures and then categorize down here. And then so we're closer to preparing our statement of cash flows.